Hi friends, Simit here from InformedTrades.com. Today is February 19th, 2014. Time for our daily Forex chart review. Basically, for those of you who haven't seen one of these videos before, each day in the morning at around 8 o'clock Eastern Time. Today we are a little early. I will share the trades that I'm placing, review the Forex charts, 20-some currency pairs, and basically share my analysis as a learning tool. If I review terms that are unfamiliar to you, you can check out InformedTrades.com. Also a great place to ask questions, share your trades. Big learning repository there. Check it out. Join us in our learning community, InformedTrades.com. Let's get started with taking a look at the charts. Okay, as regular viewers know, I do like to start by reviewing the trades that I have on at the moment. So there's only one trade I have on at the moment that got filled. I placed a number of entry orders on, excuse me, yesterday, and only one got filled. So let's go to that. That is Kiwi dollar. Okay. Okay. Now, you can see it was a great entry for me. I saw this doji reversal candlestick. Let me zoom in a little bit. You can see. Okay. So here's a reversal candlestick right here at resistance, and that was my cue to enter. So I entered there. I got a pullback to this black line on this big red candle, and then it went head down. So it was really a comfortable, low-pain trade, meaning there was very little time spent as a floating loss. So that's comfortable. Haven't moved. It's not over yet though, so there could be more lossing or that feeling of floating losses to come, as I won't be able to move my stop to break even until it closes below this dotted gray line. So right now my entry order is still here. My stop is here. I did place a second entry order here, 83.99. That has not gotten filled. 83.95, excuse me. That has not gotten filled. So we'll see. But in any event, at this point, nothing to do aside from just wait. The position has a small floating profit at the moment. Okay. And the reason I like to start, I mentioned this before, the reason I like to start with the trades I have on the moment is to see if I can move my stops to break even. In this instance, I cannot, because that determines how much risk exposure I have. Like I mentioned before, personally, I never want to be in a situation where if all my stops are hit, my account balance will fall more than 1%. That's a situation I try to avoid. So in this instance, I only have 1/8 of 1% currently risked. So if that stop got hit, now the caveat is that I have an entry order here for another 1/8 of 1%. So if this stop gets hit, both these orders will be triggered, and I'll lose 1/4 of 1%. That's fine, but something to bear in mind: if it closes below this line here, then I can move my stop to break even. So if my stop gets hit, I won't lose any money. So that's sort of the way I look at things, and it helps me determine what is my maximum risk I can take on. Okay, going back to we're starting with a regular chart analysis. Let's actually start with Euro Aussie, and I'm not going to place an order on Euro Aussie because you can see that if price did fall to that black line, I would be interested in buying. However, the caveat is that I already have an order on Aussie Swiss, and let's take a look at that. So remember this chart, and now take a look at Aussie Swiss, which you'll see is like a mirror. The Euro and the Swiss are very similar. So if you're trading Aussie Swiss, it's very similar. It's like the inverse of trading Euro Aussie. So I have this entry order. If it pulls back this black line here, I will short. We'll see though. I still like that idea. I don't know if the pullback's going to come. Euro Canada. Yeah, we did break out of this price channel here. We are testing this. Like I mentioned, in every time I view this this pattern, I like horizontal lines more than diagonal lines. I trust them more. However, those who took a shot and trusted the diagonal line here, so far looks like it's good. Looks like the market is really respecting this trend line. Okay, so that's Euro Aussie, Euro Canada, Euro Pound. Okay, this is comforting in a way because I closed out my short Euro Pound position right around here. Obviously, it would have been nicer to close it out here, but that's that. Now, the interesting thing is, should I re-enter? And I think it's time to, well, hold on to that price channel. But let's zoom out a little bit. Okay. And now we can draw our Fibonacci retracement. That's what I would do in this instance. You know, measuring a pullback, I like the Fibonacci retracement as a way to measure pullbacks. Here we go here. Okay. So we go to measure the Fibonacci retracement and go from the swing high here to this swing low here. Okay. Now that puts us right here, right? Yeah, we're at the 50% level now. So so that's interesting. I think this is also this orange line is a minor support. I wouldn't call it a huge, incredibly vital support level, but it definitely is a support level that helps add to the story. We also have a what I would regard as a shooting star candlestick pattern. So this could be an interesting short opportunity. Plus, we were outside the channel and may head back down into it. Let's take a look at the 4-hour chart. Okay, some reversal signs here, but then you have this big candle up. So that's not the most reassuring of signs. I think in this type of instance, where you have a fair amount, you have some evidence. Personally, you know, I always like to see more. So let me see if there's signs of weakness elsewhere on the euro or signs of strength elsewhere on the pound. So euro pound is something I will come back to. Let's go. Let's check out some other pairs. So maybe there's an opportunity there. I think in general I might like to see a little more evidence. Euro yen. Now we're looking at this euro yen trade from the weekly chart and still waiting for a pullback to, you know, because the euro yen, this is very far out. You know, we're targeting a much further stop out, needing a bigger pullback, needing a bigger target profit. This already expired. I placed this yen trade on a week ago. So we'll see. It's still valid. You know, you look at it from the weekly chart perspective, and it looks much more reasonable. But on a daily chart, if I'm doing these videos every day, may need to wait a couple candles on the weekly, which means a couple weeks, basically. So we'll see. At this point, just waiting. A lot of trading is just waiting. And I think a lot of people have the wrong idea about trading. They come in with visions of excitement. And I guess that is one way to trade, although, you know, if you're interested in excitement, you may want to go to a casino. If you're interested in making money, then the name of the game is risk mitigation or risk aversion, minimizing risk. All of these things can be a little boring at times, unless you appreciate the intellectual challenge or the psychological challenge, which is definitely what I appreciate. Okay. Euro Kiwi still in this consolidating range of sorts, wedge, triangle, some type of consolidation pattern. Like I mentioned, I generally try to stay away from these things. Not to say that all traders should, but just that I'm more of a let me get the big gain. So in general, and I'll post a review of my numbers at the end of each month. I know I didn't do it in January. I really want to start doing that as part of this video series. But you'll see, I was looking at my numbers the other day. My win rate is now under 50%, but I'm still profitable. So that's just the kind of trader I am. I'm more interested in a few big gains than in a lot of wins. And they're usually, not always, but usually tends to be a relationship between win percentage and reward risk. So a lot of traders like a high win percentage, but a low reward, and they'll accept a low reward risk. I'm sort of a little bit the opposite. Okay, of course, what we're all striving for is a high win percentage and a high reward risk. Get a make a lot of money on each trade. That's definitely the goal, to keep to improve on that. Okay, euro dollar. Here we go. We are outside of this, broke out above resistance here, and we do see. So there is some sign of the euro heading down. I don't think there is really enough. I could see it retesting this support level for sure. I would see that as a very likely move. Um, but in general, let me just zoom out a little bit. Okay. One might say, let me draw a box here. Oh, where am I? Here we go. Okay. So we have a bit of a box pattern from here all the way down to here. And that might be a little big of a box. Let's see if it makes sense on the weekly chart. Okay. It sort of makes sense. Well, I will say I'm going to delete that box actually, but what line I will draw a horizontal line right up here. Oh, let's make that solid black to illustrate its importance. Okay. So that's basically where we are at this point with the euro. I like pullbacks. So this was where I should have gotten long, but like I mentioned, I saw the same setup on the pound dollar and I went with that, and that worked out well. So that I didn't trade this isn't necessarily a mistake. But basically, I just need to wait for another pullback like that. I'm not really seeing any other opportunity here. Okay, so that's it for the euro. Let's move on to the pound. Pound Australian dollar. Okay, so let's see if it can pull back to, just 1 second here. Okay, sorry about that. I had something come up here off screen. Okay. Pound Australian dollar. Yeah, I mean, this is, basically each way to start an analysis for me is gauge the trend. This is clearly uptrend. From there, it's where's the support level. We trade generally 9 times out of 10 in the direction of the trend. More than 9 times out of 10. That's the way I'm looking at it. So we see the trend is clearly up. From there, it's all right. We know we want to buy, and it's what are levels to buy at. This black line, major support, we want to buy at support, sell at resistance. So where support, you could see market reacted here, here a little bit. So let's see at bare minimum if price can fall to this level. We can also look for swing lows here and swing highs and see where our Fibonacci retracement is. There's some here. Let me actually draw another Fibonacci retracement. Let's draw it from here. And on this one, If we add the 38.2, oh, okay. So I don't generally look at the 38.2 line. However, if we did look at the 38.2 Fibonacci retracement, we would see it intersects with this black support level. So that's something. Again, I'm not a huge fan. What I'd really like to see in this instance, because I'm not such a huge fan of the 38.2 level, is how candlesticks appear at this level. So if we get a range, if we see some reversal candlesticks, like bulls are really stepping in, that might be interesting. Okay, so that's pound Aussie, pound Canada. Yeah, I mean, we're still in this broken out of this price channel. Now we're testing the top. So, you know, if it falls back, see the same thing on Euro Canada. We're going to see it again on Canada Yen. We're going to, oh, not on Canada Yen, Canada Swiss, Aussie Canada, Kiwi Canada. Basically every Canada pair we have, there's this, except for against the yen, there's this price channel, and you know, it's now retracing. We'll see how far it goes. The Euro, dollar Canada, U.S. dollar Canada is what I'm really interested in, but it needs to fall back a little further. We'll see that shortly. Pound Swiss. Okay, so we are nearing a support level. We're at the 50 exponential moving average. Let's see what it looks like on the weekly chart. Okay. Not really. It looks a little range bound here. Prices between the 50 and the 200 exponential moving average. 50 SMA, 200 EMA on the weekly. On the daily, zoom out a little bit, just trying to get the right perspective here. The only thing I can really see on the daily is, you know, that price channel. You know, we have a pattern of higher lows and of higher highs. So to me, that signals, you know, that's the clearest sign of the trend. So that price channel is something I don't want to trade against. If it goes to the top, maybe I'll buy it or sell it, excuse me. Or if it falls to the bottom, that could be an interesting buy. Probably it's more interesting to buy at the bottom. But we'll see. At this point, I'm not going to trade it in the middle of the range. Pound yen. Okay, same idea, and we see this with all the yen pairs. I have entry orders on euro yen and dollar yen, so I don't want to put on another entry order. But basically, we're waiting for that pullback. We see this low everywhere. So now let's see if it pulls back. Pound Kiwi. Okay. Now we did. Just 1 second here. Okay. Okay. We are at the Okay. Okay. Yeah, this is another one where, you know, I mentioned this before. Sometimes you'll see an entry setup, but you have to also calculate the reward risk. So, and that's one of the reasons why I generally don't like counter trend trading. I am trying to incorporate that because I know it's another opportunity I can add, continue improving as a trader. But, you know, if you see, you know, for instance, this is at support, a bunch of candlesticks consolidating, that always, you know, or that's a classic entry signal. But you don't always get a good risk reward. So you have to think about, all right, where can I put my stop? There's a lot of congestion going on, so would it have been appropriate to put it here? Would this be too close? That's something to consider. And then what's the reward relative to the risk? So in general, the pound Kiwi, pound in general is still channeling upwards. We saw the same thing with Swiss. So I'm more interested in buying at the bottom, maybe this blue line here, if we can pull back. It doesn't look like we're pulling back now. So I'll just pass. The rally in the pound is, remember, I'm going to come back to that short euro pound trade, and the rally in the pound is supportive of that. Pound dollar. Okay. Pound dollar, I did ride this. I did go long here, went up here, and now maybe this will be a 50% retracement. So if it pulls back here and a horizontal support. So if it pulls back there, that could be interesting. In general, I will, for this one, I'll wait for the candlesticks. Let's see what the candlesticks look like. Okay, so that's pound. Let's go to US dollar. Dollar Canada. Okay, this is the moment I've been waiting for. Because I really want to see if the Canadian dollar could fall to this level here, this this horizontal support level. And let's see what it's like on the weekly. Okay. Okay, on the weekly, these black lines are definitely more better, stronger support. Let's go back to the daily. You can see what's significant here is you can see there was a bit of a consolidation before the breakout. So that's sort of why this level here could be of some significance. It's also, what I like more is that it's close to the 50 simple moving average and the 50% Fibonacci retracement. Now, let's see. Okay. And the market did sort of bounce right off it here. Okay, we see last time it was here. The support level is more clearer on the 4-hour chart. That dashed gray line is as support is a bit clearer on the 4-hour chart. We'll see. What I really would like to see, though, and I'll keep an eye on this may be something to look at intraday as well. Let's go back to the daily. Okay, I want to see one more candle, maybe tomorrow. Tomorrow might be the day to put an entry order on Dollar Canada. One more day. Let's see. After basically the idea here, just to illustrate what I'm thinking, and I'm going again. You know, trading is not about necessarily being right. Like I mentioned, you know, I've been profitable for the past since 2005, every year since 2005. But I lose the majority of my trades. So it's not necessarily about being wrong. It's about controlling reward risk. Of course, like I mentioned earlier, the best scenario is to be right and to have great reward risk. You know, and that's of course what we're always working on improving. But anyway, in this instance, you know, when you see a big run up and you see a big run down, I'm interested in buying the dip. This is still in an uptrend, so I'm interested in buying the dip. We are now at a level where the market has sold off enough, where sellers may be approaching exhaustion, and that's sort of the way I'm looking at it. However, to confirm that, I want to see buyers step in. I want to see a range develop. That's the best case scenario, in my opinion. If you understand support, resistance, supply demand analysis, we have a lot of material on this on InformedTrades that will help explain why I want to see a trading range here, why I say that's the best case. If you see a trading range plus reversal candlesticks plus support plus a 50 simple moving average there that acts as a secondary support, and the 50% Fibonacci retracement from the swing low to swing high. If you see all these signs there, you know, that makes the case much stronger, and that's sort of what I'm looking for. Confluence, basically. You want to see a whole bunch of stuff all pointing in the same direction. Okay, so Dollar Canada, not yet, in my opinion. Maybe tomorrow. And I do tend to, one thing I need to improve on is I do miss out on a lot of opportunities. So entry orders just don't get filled. I haven't found the perfect combination yet. So far, I found it's better to suffer from that problem, meaning have a lot of orders that don't get filled, rather than the opposite of chasing too much and not getting good enough fills, which was my problem previously. So I think I'm moving in the right direction, but I just need to make sure I'm improving my timing a little more. You know, get filled at just the right spot. Okay. or find that level where it's a really good fill, but the chance of getting filled is also where it needs to be. Okay, dollar yen. I have my entry order on here. It's another example. But this is a weekly dollar yen. I'm mainly looking at from a weekly chart. Our target, my target for this trade is way up here. Maybe you can see it on the weekly. No, but it's basically, is it on the monthly? It is, okay. So yeah, you can see I'm really targeting. This is over 9-to-1 reward risk. If this order does get filled, it's going to be I'm going to be holding it. Let me clarify. If it gets filled and it goes in my favor, this won't get closed for a while. But that's fine. Chances are, what's important to note is, if it does get filled and it goes in my favor, let's say it clears this level here, I'll be able to move my stop to break even. In fact, let me draw that line right here. And I'll make it orange and dashed a little thinner. Okay. So if it closes above this orange line, this dashed orange line here, which is 104.60, then I'll move my stop to break even, and then I'm not long. That's important to me because that determines my capital it limits the amount of trades I'm willing to take on if my stop is not at break even. So if my account balance could still fall, then I don't want to risk capital on other trades. And I talked about this in what was the video from 2 days ago, I believe. So moving to break even is a really important part of my strategy, and it's sort of it's another way of risk mitigation, of controlling. If you do it properly, it's a way of minimizing your risk, controlling your risk while not curtailing the upside and profit, which I think is really important. Okay, so that's dollar yen. Basically, the short summary there is waiting. Dollar Singapore. Okay, now we'll look at this, but it's the same scenario here, where we're seeing this consolidation pattern, right? You're seeing this wedge. You see a pattern of higher lows, as well as a pattern of lower highs. So the market is consolidating. I was talking about this as a support level and buying here. Turns out it would have worked well, at least initially, but I don't really like to trade these patterns that much. If there's Then you gotta start thinking, maybe I could have. Well, that would have been a good target, 28. I suppose I could have put on an entry order here, but we'll see. It probably wouldn't have gotten filled because it took right off. Maybe I can still put it on. I don't really like it though. I like to know one of two things. I like it to be a clear box, or a clear trend. Like, it goes back to my general aversion to diagonal lines. I really don't want to trade off diagonal lines. I found I did that before, and I got much better results when I started focusing much more on support and resistance. One exception is price channels. I will look at them to get an idea. Especially, I'm more interested in price channels as a profit target. So basically, maybe I'll exit on a diagonal line, take a profit there, but I doubt I'd enter on it. Okay, so nothing on dollar Singapore that I'm doing yet. And now we are going to the Canadian dollar. Canada Swiss, and this is the same as Euro Canada, right? So we saw, just like we said, price channel and test of it on Euro Canada. We're seeing that on Canada Yen, or excuse me, Canada Swiss. What we're looking at now, Canada Swiss. If we pull back to this, well, really, I'd want to see a pullback to 82.77. That could be an interesting short. Canada Yen. Okay. Okay, Canada Yen. Yeah, I got my yen trades on dollar yen and euro yen. There may be an opportunity here. I'm still seeing this low. That's the thing. That's what always draws me in. But I'm glad I'm seeing this on every yen pair, basically. So it really signals that the low is in. Some people may want to put a market order. When you see this, may want to put a market order or put half on now and half later. I've done that before. I found it better to just wait for the entry. But we'll see. In any event, I'm focusing my yen energy or yen risk portion to the dollar yen and the euro yen, and I'm looking at it from a longer time frame. That's my basic yen strategy at the moment. And again, I've mentioned this multiple times in the videos I've been doing. InformedTrades.com/Japan. That really explains the opportunity in the yen. Kyle Bass says, it's, and I agree 100%. Kyle Bass, John Malden, a bunch of people have been talking about the yen. The economy is in a lot of trouble, and the yen is really going to face massive devaluation at some point. Kyle Bass has a target of 350. John Malden said 150 to 200. We're now at dollar. These are numbers for dollar yen, which is now at 102, I think, somewhere around there, 101, 102. So we are talking huge potential moves there. So that's sort of where I'm coming from and looking at it from a weekly chart. Okay, I was looking at it from a daily chart and I was getting stopped out a bunch, and it didn't even make sense to me because the profit targets weren't. The opportunity with the yen is that big long-term thing, in my opinion. Okay, so that's Canada. I'm not really doing anything on either one of those. Let's look at Australian dollar. Aussie Canada. Yeah, still on. Well, now we are at the bottom of this. Oh no, we're not at the bottom of this price channel. Let me actually extend the lines on this price channel. Extend right. There we go. Okay, so we're testing. Some people may wish to enter here. But let me actually, I'm surprised I didn't draw a Fibonacci retracement here. I should have done that. And we could do it from here, let's say. And let me remove the 38.2, so I generally don't want to look at that. Okay, if you can fall back a little more, bottom this and so when the bottom, I mentioned I don't really like entering on diagonal lines, but if it coincides with other terms, if I see a diagonal trend line coincide with a minor support, like what we're seeing in this dashed gray line, then I may be inclined to enter. But at this point, there's just not enough evidence, in my opinion. And like I mentioned, the majority of the times, today I've got a bunch of entry orders on. Yesterday, one order got filled. So, and on average, I'm probably getting 8 to 12 trades a month. So, not super active. That's not to say that's the best approach. It's just an approach that works for me in light of my lifestyle, my psychology. So, you need to find what works for you. Aussie Swiss. Yeah, we looked at this with Euro Aussie. So I have my entry order on here. Let's see if it gets filled. It's just waiting. I've had a lot of that with short Australian dollar positions. Really haven't. I've had difficulty timing short Australian. I mean, I've called the moves correctly, but my entry orders haven't gotten filled. And I don't think I need to think about it. I mean, obviously, maybe it's just a bad stretch. I would definitely like to get it. Obviously, would like to get it filled because I had the same issue. Where was it? Somewhere like here. Somewhere. Oh, here, right here. So in January, I was like, oh, Aussie dollar's going to break south, and it did. But I missed the move because my entry order didn't get filled, like probably on this candle here, something like that. And now the same issue coming in February at the same price level. So I think maybe I need to revisit where I'm putting my entry orders and sort of get a better target. But in any event, at this point, my entry order is here, 109.07, still there on Aussie Kiwi. We'll see if it gets filled. I still think it's legitimate. I don't really want to move it at this point. Let's see if it gets filled. Market is getting closer to it. We are now about 60 pips away. So, okay, that's Aussie Kiwi, Aussie dollar. Okay. Did this order get filled yesterday? Let me see, Aussie dollar. Hmm. Okay, I have my entry order on it. Something's going on here. Okay. Trying to understand, and I may need to review my own videos here. Let me see. I marked 91.90. I have an entry order on to enter at 91.34, that red line, and my stop at 91.90. Hmm. Okay, well, in any event, the question is, do I want to short here? And this is definitely, this black line is definitely a, would I put my stop here? That's the question. Let me put it right there. Huh. Okay, I think I just made a mistake here. Okay, let me see. We'll come back to this. You know, I should have entered this yesterday. Now this may not get filled. Okay. But basically, it looks like I should enter at 90.69, stop at 91.54, target 86.54. We'll come back to this, but that's sort of the way it looks like. I don't know if it's going to get filled. I really should have put this order on yesterday. I did have an order on, but I misread. Stupid calculation error on my part. So if you're looking at the chart, you would think it got filled, but I think I typed it in wrong on my trading station. So beware of typos. I don't know. Stupid error on my part. And that's definitely been, costing me. I think, a lot of it is just stupid errors like that. I probably, it's probably cost me about 1% a year over the past couple years. So that's another thing that automation can greatly assist, although you have to make sure that everything is partially automated in some way now. It's all very electronic. You still have to make sure that you code it properly, whether it's coding. If you miscode it, then that can be a that can be a bigger problem. Okay, so we'll come back to Aussie dollar. Kiwi Canada. Sorry, I just got distracted. Ugh. Yeah, because I posted on my blog the other day about shorting Aussie dollar and Kiwi dollar, which is what I did, and my Kiwi dollar order got filled. So anyway, Kiwi Canada. Yeah, this is still in an uptrend. So maybe if it can fall to 89.70, that's what we're sort of waiting on. Nothing yet until it can fall to that level, in my opinion. And Kiwi Swiss has a similar issue where here we are in a box. Just need to get that filled. Or if we can fall to the top or bottom of the range, that's sort of where the opportunity is. Not really doing anything until then. It's just sort of, I'd rather just, let it play out in the range. That's where I want to be in the trade when it's in the range. I don't want to enter when it's in the range. Kiwi Swiss. Okay. Oh yeah, that's what we were just looking at. Kiwi Yen. Yeah, we see this, like I mentioned, we see this everywhere in the yen. We see this really looks like the low. Bullish engulfing here. You see it very clearly on Kiwi Yen. Bullish engulfing pattern here. That's really bullish. Let's see if it gets a pullback, though. That's sort of what I'm waiting for on Euro Yen and Dollar Yen. Okay, so that's Kiwi Yen. Now let's go to Kiwi Dollar. That's what I'm already filled on. And yeah. So that's sort of that. Let's go back to Australian dollar, US dollar. Okay. So I'm just going to modify my entry position a bit. And maybe, you know, let me actually move in on the 4-hour chart. Okay, yeah, that's a good 90.69 is a good level 10 trend. Might go 90.66. Same difference basically. So that is risking 34 plus 54, 88 pips to gain 412 pips. So do the math on that. That is somewhere between 4 and 5 to 1. Yeah, it's like 3.5 to 1 or so. So that's a trade. One order I'll be placing or modifying an existing order, I should say. And that's about it. Other than that, we do have orders on number of orders to short Australian dollar. That's the main thing going on. And tomorrow we'll take a look at dollar Canada, the opportunity I've been waiting for. Maybe it's ready. That's about it. As always, any questions you have, anything you want to add, join us at InformedTrades.com. Big learning community there. Lots of free material. Join, register, participate. Journaling is half of it. So a lot of people sign up. They message me privately. They don't really comment. You know, I'm sure they're reading a lot. That's great. Absorb that information. But really, emphasizing participation is where you get the huge amount of value. That's about it. We'll see you hopefully on Informed Trades. Best of luck in your trading. Take care.